Live.
We
We
are
are live.
live. Hey, folks, Bill and Brian with Energy Rogue. Brian, do we want to roll a logo?
Yes. Apologies, but we're going to roll it. Boy, that thing is cheesy.
It is cheesy, but I love it,
I love it too.
especially since we paid for it.
Yeah,
Hey,
exactly.
folks, we know it's lunchtime, and a lot of you guys aren't on. You're out enjoying whatever you're doing for lunch. But Brian and I were in a conversation today, and we just got to thinking. You know what? We got to share this with our our followers. So we were talking about what would it take for natural gas to go to $4. Now, if you haven't been following us, you should know by now that Brian is expecting it to get to $3 sooner than I think it's going to get to $3. And so, what that just asked the natural question is how does it go to from that three on up to four? And so we did a little study in the background and sort of seeing where it's at. Right now, apparently, it will take us 6 years to get it to four based on our forward charts. Is that right, Brian?
Something like that. Let's take a look because actually we've got, let's see, in 2025 we're about 6, 7 cents below four. But you can see a solid. This is the forward markets based on yesterday's close, and this is in a really cool uh, system on Energy Rogue. It only costs $89 a month,
Only
and
$89 a month.
only
Well,
80.
that's almost free.
Yeah, and we got to update all our marketing stuff because I think we only say we have 100 charts or something like that. I think we're 150, 175, something like that. But we talk about fundamentals, we talk about technicals, and we talk about the balance of the market. And that's really where Bill and I spend most of our time is on the fundamental side. But we always start with where we are trading, and we are currently trading for the balance of 2023 right at 270, and for 2024 350 ish, and then 25 through 28 that's on low volume, so a lot of
Yeah,
people discount the future.
there's no
um,
liquidity out there right now.
yeah, but that's at $4, and as Bill said, I have a different opinion, and that's part of the reason that we share our opinion. We are not financial advisors. Do your own research. Please research everything that you are potentially trading. If you're trading commodities, equities, whatever you are doing, but where we are right now for the balance of 2023 is at 270. And let's take a look at the forward pricing, because that really shows summer pricing is down, but you can see in by December we're already up to 350. So
So where we're looking at this is that on the fundamental side, the biggest move in nat gas is usually because of demand. And so in the past, when you talked about demand, you talked about weather or you talked about storage fill. So
right,
when you look at if you look at our storage fill right now, we're in a pretty healthy area as far as
we're
producing.
16.6% above the 5-year average.
So that's not a significant demand. The next biggest thing is when you talk about weather. Well, we're sort of in the back end of a shoulder month. The 1st of June here is not real strong, but it will continue to get hotter, and so that demand will go up. Um, Now, if you look at production, we're in the high end of what we've been able to produce. When you add that to our imports, our total supply is over 105 BCF a day. So that's significant. The biggest thing that changes in the future is going to be LNG going out of the country. Of course, realize that we can talk about the LNG plants, but you also have to talk about the LNG demand overseas.
Yep.
And so I think sometimes when we see this stuff that's happening in 27, that's probably not going to happen that hard, but it will increase.
So a
So
couple,
all that said is that demand supply balance is what's going to move the fundamental prices. Now there can be, so when you talk about technicals, there's two things that move technicals. The first thing is nothing. When nothing is happening, the technical price that will drift down. It has a tendency to always drift down when nothing is happening. So that's when traders like to come in and they try to. And I'm not saying they do it. I'm saying what they're trying to do is take advantage of whenever there's any type of news that's negative, or there's a geopolitical event, or there's all sorts of things that develop a temporary hype that allows it to go up for a few days or down or up, whichever way that they want it to go. And believe me, there's people on both sides wanting to go up and wanting to go down because of what their positions are.
right.
So when you're looking there for that price, you're looking at probably some sort of geopolitical event newsworthy. For fundamentals to go up strong, the geopolitical event has to be something much more significant. So, as an example, when the Russians shut down their gas pipeline, everything went up because the LNG price was going out, even though we weren't able to take advantage of that once we maxed out our LNG capacity. And so, but as they had a mild winter, that demand went down. I mean, we saw TTF up as high as $80, didn't we, Brian?
Yep. We saw TTF and JKM, and they were in the $80 range. And most of the range that we've seen or witnessed over the last couple of years has probably been JKM, TTF, probably somewhere between. There's low periods where it was hitting the teens, probably high teens, like 17, and then it would extend up to 35. So it kind of stayed in that range until last year. And in last year, if you recall, we had this parabolic spike, and we went from 3 to 5 to I gotta actually change this chart. We went all the way up to 10. So look at this chart. We went up and tested it again. We went from 9 back to 5, back up to 10, back down to 4. Then right here in December, we were in the $6, and we collapsed all the way in February. We were, let's see, is that February? Yeah. In February, we were already in the 2s, and we have been in the 2s for the last couple months. And so a lot of the reason that we hear people say that, well, we're going to stay in the 2s. There are some people that were expecting this to get to the $1.80 area, maybe $1.50. Now, the reason why is because of this chart right here. So what they were looking at is the year on year since probably this period. They were looking at this curve up to today. So when you look at this curve, that just means production is just going to keep building, right? This is what fuels a lot of the bearish talk is we went from 87 to over 100 during this time frame. Now, what I'm going to do is I'm going to explain how we are now in a period where we are treading water. We have been growing, but when you take a look at this, I'm going to hop over here. Shale natural gas, which is the bulk of our supply here in the United States, declines. Currently, we're at a rate about 3 BCF per day every single month, or 3% of our supply goes away. So when you take a look, we have to cover this decline to actually add production. This is new production that is added. And as you can see, we're well in 2022, we were well above that. We're close to 4. But look at this trend. We're dropping, and we're dropping fast. That doesn't even take into account the rig drops that we've seen over the last several weeks. So when we take a look at this, we went from 700 rigs down to 680. We're far beneath that right now.
So
And
what a lot of people don't realize is that the decline is the monster in the basement. It's always there. It's always pulling production down. And
yes,
so if you don't have enough new wells coming on to cover that, you always have to cover at least 3 to 7% minimum, and then you have to because besides the shale, we're also having decline in the non-shale assets, and so and that means that it's always getting worse. So to put it in terms of good or bad, depending on whether you're a producer or whether you're an end user, the the amount of reserves are always getting less. So that being said, the way we're going to get to $4 is that if rigs continue to be down, demand continues to go up, and demand, by the way, on the electrical side, has never gone down for natural gas.
well, we can look at it right here. This is, let's see how far back this goes. Yep. You can look at it right here, and let's take this out of the equation. And you can look, this chart just keeps getting bigger. And so a lot of bears will talk about the fact that we are going to have renewables, and that is going to impact things. But I want y'all to look at this curve. We have over 150 different charts. This is the reason that we still need natural gas. You can go from this level down to here. The gap that we have here, I mean, let's just take a look at how many megawatts solar and wind. I mean,
So,
look at how many megawatts, close to 100, and then all the way down to 20. And that's within one single day. So we have 80 megawatt hours that we need to just cover within a few hours, just because it didn't get windy and the sun's not out.
so Brian Patrick's asking, do we have something on a daily decline? I think ours is weekly, isn't it? Our charts on the decline is weekly, or is it monthly?
No, it's actually monthly, Patrick. And you can feel free to reach out to us directly. There is an email down below, but you can also, let me add this. Let's see.
So the
If
reason
you're
we do
looking
that,
for something specific, reach out to us. You can also book a meeting, and we'd be happy to talk through what we have. We don't have daily decline, because that also gets clunky, because you may have wells go offline and come back online. So what we look at are slower moving trends, which are going to be the decline is going to be on a monthly basis. That's
and
what we
that
currently
can
have.
change based on how their completion schedule works as well too.
Yep.
and so they can complete more at the end of the month. Uh, Having worked for a producer, they're always trying to get their revenue. Then uh, we call people like Patrick, say, "Come get our oil on the 30th," uh, and because that's when we finally have a load, and so it gets. So that's why we sort of smooth it out
Yep.
over a long period of time.
And
Um,
Emerald, thanks for reaching out. And I'm glad that you enjoy this. Some people don't like our hokey intro. Let us know what you think of the intro. But one of the interesting things to look at is when we are talking about decline, it is a slower moving target that we're watching. It is on a monthly. There are weekly numbers out there. I do think that there's a little bit of noise that happens in the monthly and daily decline. But again, Patrick, you can take a look at.
yeah, Patrick,
Oh,
what we're seeing is 3 BCF a month. That's what it shows to us on the, and that's on basically on the shale gas. Is that all right, Brian?
so if you have 100 BCF a day of supply, every month, if we brought on 0 wells, we would lose 3 BCF a day for the next month. So that's kind of what we're saying. It's a little confusing because you have monthly and per day. So we're saying the quantity on a given month is 100 BCF. We're currently slightly
Per
above
day,
that.
yeah.
But then if we brought on 0 wells, the next month we would have 97, and the next month after that it would be 94. It's what's called a hyperbolic curve, so it smooths out. It's not going to be 3 BCF if we don't bring on any new wells. But what you can see is when we take a look, let me actually go over here. No, it's on this one. Um, is we have one key chart that I keep looking at, and this is what our net change is. So this is new wells minus decline. So every month, if we are above 0, we are adding supply. And last year, we were adding close to a BCF a day every single month. So we would go from 96 to 97, 97 to 98, so on and so forth. But what's happening is ever since last summer, we're getting less and less and less. And that is because of a slow moving change that we don't think a lot of people are talking about or seeing, which is the potential that we might end up having more decline than new production. We haven't seen that in a long time. Let's actually see when we saw that last. So during the bankruptcy period, we dropped below 0. And then, of course, this gets a
So we're
little
going to
skewed because
pandemic.
of
Is that where we're at?
yeah, pandemic, but that's not true decline. That has shut-ins built with it.
Right.
So if we take
So
a
that's
look
the
at
other
it,
thing we try to do is we try to take the anomalies out when we can.
yeah. So anyway, Patrick, if that doesn't clear it up, please book a meeting or reach out to us directly. But yeah, it's 3 BCF a
Patrick, and
day.
I'd even let you buy me lunch if you really wanted to. So
Yeah.
I'm just that type of guy.
So the key is if we start losing rigs, which we are, this is a monthly number right here, but we're starting to lose more and more rigs over the last May data is not in there yet, but once May data comes in, we are losing rigs and we're already declining, and that was at higher rig count. So when we take a look at the balance of the market, which is what we take a look at every day, well, this is weekly numbers. We look at what our supply is, what our net Canadian imports, which are down because of Canadian wildfires. And believe it or not, we do import a little bit on LNG, and what our demand is on power, industrial, residential, commercial, pipe fuel losses, exports to Mexico, which are topping, and LNG exports. That's a variable that's a variable that a lot of people don't realize we are stair stepping. Let me scroll down here. We are stair stepping from, let's see, we are in June, right?
Yeah.
So we're going to stair step from 13 to up over 20
If
by
the plants continue to be built and there's a demand for the product.
within 24 months. So when we take a look at 24 months, and we got close to an additional 7 BCF a day, and we have declining production because of this chart right here. The other anomaly is this right here has given the market a lot of feeling that, well, we can just turn on a bunch of supply. There's another thing that we look at, which are called drilled and uncompletes, and we can go into a long thesis on that. Most of this volume was an inventory that was built up during COVID for a well that was drilled and brought online. That inventory is largely exhausted. We don't have another new supply unless we add rigs. Until we add rigs, I am not pushing off of my calls, which my calls are more aggressive than Bill's. If you want to figure out exactly what we're calling for on markets, fundamentals are going to drive it to 3, and fundamentals will drive it to 4. The only question is when. Bill and I have different opinions on when, but I think that we are going to get there sooner rather than later, because I think we're going to be surprised.
All right, folks, that's what we got for right today. We appreciate you guys viewing us live, and the comments are awesome. We like that
Yes.
because it allows us to be able to address what you're thinking at the same time. So,
Yeah.
listen, we appreciate it. And Brian, anything else?
I think that's it. Listen, Patrick Emerald, thanks for showing up, and anybody else that wants to reach out, let us know, and we will until next time, we will see you then.
See you guys.